Can you stand it, guys? Another Forex setup. Truth is, I like Forex setups the best myself. Hi, this is Tim from TradingStrategyGuides.com. The Great British Pound Japanese Yen pair moved up 1,000 pips, and it's consolidating right now. I'm going to show you that in just a minute. And forgive me, but I'm skipping the factoid of the day today. Why? Because we've got a whole bunch of charts to look at, and I just ran out of time. Hopefully I'll get this video done on time. I promise the factoids will be back. So let's get started with the open trades, then the pound yen setup. Later on, we'll take a look at the trading maxim for the day. Here we go. Remember to click that subscribe button and hit the bell so you don't miss any of these great Forex setups. Let's take a look at the open trades. The S&P 500 pushed up to a new high right up here. So I moved my stop loss to 3062 to lock in 25.75 on the second half. AMD looks like it's making a bit of a triangle consolidation here. So I moved the stop up to 35.40, locking in 51 cents, just below that triangle, because a consolidation can break in either direction, and I definitely want to lock in some profit. The Russell 2000 barely hit our target right here on Tuesday, then it lost all its momentum, made this pin bar, and then it dropped down on Wednesday and hit our break-even stop on the second half. So we made some profit on the first half and broke even on the second half. The small winner, and I'm done with the Russell for right now. E-mini Dow Jones hit our target yesterday. Took half off for profit, set my stop to break even right here at 27,380 on the second half, and I want to see it make a higher high above this level before I move the stop up. I was a bit concerned on Kohl's Corporation here with this candle, but obviously it closed outside of the range and then hit our target yesterday. So half off of this for profit, and my stop is at break even again until I see a higher high above here. Costco Wholesale triggered a buy yesterday right here just above the ascending triangle, and I bought it full size at 305.21. My stop is 299.08. My first target 309.30. Today's candle is not looking very good right now. We'll see. If this closes back inside this triangle, I'll shut the trade down, and if that happens, I'll watch to see if the volume continues to drop down here, and I'll consider moving this resistance line up and continuing to watch this ascending triangle. I'll let you know what happens on this. Okay, let's take a look at today's Great British Pound Japanese Yen. And here it is on the daily chart with this nice continuation triangle right here. Why is it a continuation triangle, you might say? Well, it's a triangle consolidation after a big trend. Typically, it's a pause in the trend, hence the name continuation triangle. But still, a consolidation can break in either direction, depending on the mood of the market. Remember, the market's always right. In this case, there's this huge 1,000 pip move up over a week's time or so, and then this ever-tightening wind up of prices right here, with declining volume and declining volatility. Of course, the volatility is simply the average true range, or the average length of the last 14 candles. A consolidation like this can break with a lot of power in either direction, and I would be happy taking it either way. This candle right here is looking kind of bearish because it's wide and very red and close to the bottom, but of course it's still a long time before this candle closes for the day. We'll see what happens. So here's my proposed plan. We'll buy a daily close above this triangle or sell a daily close below the triangle. On the breaking candle, we want to see the volume reach the volume average right here, If it doesn't quite reach the average but does reach 75% of the average, I'll open a half size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get 0.75. If you don't get at least 0.75, stand aside on the trade. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. So again, on the breaking candle, look over here at the average true range, multiply that by 1.5, and put your stop behind the entry by that amount. So if this breaks to the downside and your entry is on the candle's close down here, then your stop will be 1.5 times the ATR above it, and your target will be 1 times the ATR below it. Of course, it's just the opposite for break to the upside. If after entering the trade you get a candle close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now these two rules are the very definition of cutting your losses and letting your winners run. Typically I do this with 2 positions. The first position has a hard stop loss and a hard take profit. That's the position that will take off when price hits the target. And the second position will have a hard stop loss and no take profit. That's a position that will be allowed to run. Also, I only risk 2% of my account on each trade. No single trade should make or break you. And that's our setup on the pound yen today. I'm going to tell you this again, and I tell you this every time, but I want to make sure that you remember I'm not telling you what to do. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. If you've developed a trade management plan that works better for you, by all means use it. Trading is a very personal thing, and things that work for me may not work for you. You have to understand your personal psychology. You have to understand your own mind to find the best strategies for your own trading. And psychology, of course, in my opinion, is the most important part of trading. And the trading maxims are my way of helping to handle my personal psychology. Today I've got a great one from the archives for you. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to look at a maxim from one of my favorite authors. Tim's Trading Maxim number 43. The only people who achieve much are those who want knowledge so badly that they seek it while the conditions are still unfavorable. Favorable conditions never come. C.S. Lewis is one of my favorite authors. Some of you may know the Chronicles of Narnia. My particular favorite is his Space Trilogy. If you've never read any of his works, I recommend looking him up. The man is filled with wisdom. This particular quote hits very close to home for me. I've always been the guy that wanted the circumstances to be perfect before I started to do something. That's not a great mental attitude for an entrepreneur. As Lewis says, favorable conditions never come. I've had to learn this by missing out on quite a few great opportunities because I was waiting for favorable conditions before I started. I still fight with this one. Are you waiting to start something until you've got enough money or time or some other scarce commodity? Bump that. Start right now by telling me in the comments about your idea and what you're going to do to get started right now. Today. No, not tomorrow. Right now. Well, you can wait till my video is over if you want to. I'm almost done. Remember our great British pound Japanese yen trade plan right here. We're going to buy a daily close above this triangle or sell a daily close below this triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And Tim Black's Trading Picks. Sign up for my free Trading Picks email list. I'll be sending out 3 or 4 trading picks a week, just like this one right here. Everything from stocks to futures to cryptos to Forex, my favorite. And you'll be the first to see them. And the best thing about it is they're free. I'll put a link below the video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some Q&A or training once in a while. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget to comment about what things that you've been putting off that you're going to start right now. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next time.